Breaking news alert. And I need every single one of you to stop what you are doing right now because what I am about to share could directly impact the money hitting your bank account starting May 1st. I personally went through the official SSA policy memos, Federal Register updates, and government budget documents, so you don't have to. And let me tell you, there is a ton of misinformation circulating on Facebook and TikTok right now. People are panicking over things that aren't true and missing the things that are real. I'm here to give you the facts. Nothing more, nothing less. Before we dive in, drop a comment right now with your city and state. I am tracking exactly how these 4 changes are hitting different regions across the country, and your comment helps me bring you more targeted information. Let's get into it. All right, 4 changes. May 1st, let me walk you through every single one of them and explain exactly why they are happening. This is not a drill. The Social Security Administration is currently operating under a combination of pressures that have not existed simultaneously in over 30 years. We have a federal overpayment recovery push that has been accelerating since late 2023. We have staffing cuts inside the SSA that have created processing backlogs at historic levels. We have new cost of living verification requirements tied to the updated Secure 2.0 and budget reconciliation frameworks. And we have a shift in how income and household data is being cross-referenced with IRS records in real time. Let that sink in. These aren't just bureaucratic hiccups. Each one of these 4 changes has a direct dollar impact on your monthly benefit. Change number 1. The SSA has officially reinstated full 100% overpayment recovery, meaning if they believe they overpaid you, even going back years, they can now withhold your entire monthly check until the debt is paid. This went from a 10% withholding cap, which was put in place as a protection in 2023, back to 100%. That cap is gone as of March 27, 2025, for new overpayment notices. If your notice comes in May, you could receive $0 for the month. Change number 2. The SSA has begun a new wave of income and asset redeterminations for SSI recipients. If your financial situation has changed, even slightly, and you did not proactively report it, you may be flagged for a benefit reduction or temporary suspension beginning this month. Change number 3. Social Security Disability Beneficiaries, SSDI, are now entering a new continuing disability review cycle. The SSA announced it is increasing CDR rates for specific diagnostic categories. If you are selected for a CDR and do not respond to documentation requests within 30 days, your benefits can be suspended automatically, with no advance warning beyond the initial letter. Change number 4. Payment timing for certain beneficiaries born between the 11th and 20th of the month is being shifted by 1 banking business day due to the May calendar structure. For most people, this is a minor inconvenience, but for those relying on autopay for rent or medications on a specific date, this 1-day shift can create cascading financial problems. 4 changes, each one carrying real risk. And here is what makes this especially alarming. The SSA's own Inspector General flagged an error rate above 6% in overpayment determinations. That means for every 100 people getting an overpayment notice right now, statistically, 6 of them may not actually owe that money. This is not your fault, but it is your responsibility to respond, and fast. Now let's talk numbers, and let's talk geography, because these 4 changes are not hitting every state equally. I want to walk you through the data I've pulled from SSA regional office filings, state Medicaid coordination reports, and the most recent Congressional Budget Office projections. Let's start in Alaska. Alaska has one of the highest per capita SSI recipient rates in the country, partly due to rural isolation, limited employment opportunities, and high living costs. The average SSI benefit in Alaska sits around $943 per month, slightly above the federal base because Alaska supplements the federal payment. But here is the problem. Alaska also has one of the lowest SSA field office staffing ratios in the nation. With fewer caseworkers processing redeterminations, delays are longer, and errors are more common. If you are in Alaska and you receive a redetermination notice right now, you are looking at a potential 60 to 90-day resolution window. That is 2 to 3 months of uncertainty. Now let's move to Florida. Florida has the 3rd largest Social Security recipient population in the entire country, over 4.6 million beneficiaries. Of those, approximately 710,000 are SSI recipients. The overpayment recovery push is hitting Florida particularly hard because Florida has a high rate of SSI recipients who also receive some form of income from part-time work, family support, or rental assistance, all of which must be reported. The redetermination process in Florida is generating an unusually high number of flagged cases right now, and with the 100% recovery rule back in place, those flags are converting into zeroed-out checks faster than at any point in the last decade. In California, the state with the highest SSI enrollment in the nation, at over 1.3 million recipients, the situation is compounded by the state's own supplemental payment program. California adds a state supplement on top of the federal SSI benefit, meaning recipients here can receive anywhere from $1,040 to $1,230 per month depending on living situation. The risk in California is not just overpayment recovery, it is coordination delay between the SSA and the California Department of Social Services. When federal changes happen fast, state systems lag. That lag can create a temporary benefit gap that leaves recipients without income for weeks. Texas presents a different kind of crisis. Texas does not offer a state supplement to SSI. Recipients receive only the federal base amount, currently $943 per month for an individual. Texas also has one of the highest rates of SSI recipients who are elderly immigrants, a population that is disproportionately impacted by the new income cross-referencing system because their household structures are more complex and harder to document quickly. In Texas, we are seeing a significant spike in requests for reconsideration hearings, suggesting that a large number of Texans are receiving notices they believe are inaccurate. In New York, another high-volume state, the CDR increase for SSDI is generating real fear in communities that rely heavily on disability income. New York's SSDI average benefit sits around $1,537 per month. For a household that has budgeted around that number for years, a CDR suspension, even a temporary one, can mean the difference between keeping the lights on and not. And then there is Georgia. Georgia is where I want you to pay very close attention because the state is simultaneously dealing with Medicaid redetermination fallout from the unwinding of pandemic-era protections and the new SSA changes hitting simultaneously. Georgia's low-income senior and disability population is being squeezed from two directions at once. Data from Georgia's Department of Community Health shows that over 290,000 Georgians lost Medicaid coverage during the redetermination wave, many of whom are also SSI or SSDI recipients. Losing Medicaid while also facing a benefit suspension is a catastrophic combination. Here is the bottom line on the data. States doing relatively better right now are those with robust state supplement programs, higher SSA staffing ratios, and active legal aid infrastructure. States like Massachusetts, Minnesota, and Washington. If you are in one of those states, you still need to take action, but your safety net is slightly stronger. If you are in Florida, Texas, Georgia, or a rural state like Alaska or Mississippi, your risk level right now is significantly elevated. And the 6% SSA error rate I mentioned earlier, that translates to tens of thousands of incorrect notices going out this month alone. Let me now break down specifically how each of these 4 changes hits different groups, because your situation matters, and the impact is not one size fits all. If you are on SSI, supplemental security income, you are in the highest risk category right now. SSI is needs-based, which means the SSA is continuously cross-referencing your income, assets, and living situation against IRS and state records. The new real-time data matching system means that a change in your bank balance, a one-time payment from a family member, or even a small inheritance can trigger an automatic flag before you even know it happened. If flagged, your benefit can be reduced or suspended while the SSA investigates. The overpayment clawback works like this. They calculate what they believe they overpaid, send you a notice, and, under the reinstated 100% recovery rule, can withhold your entire next check. You have 90 days to appeal. But if you miss that window, the debt is locked in and recovery begins immediately. If you are on SSDI, Social Security Disability Insurance, your primary risk right now is the CDR wave. The SSA has been under congressional pressure to clear its CDR backlog, and the result is an accelerated review schedule for several diagnostic categories, including musculoskeletal conditions, mental health diagnoses, and certain cardiovascular conditions. If you receive a CDR packet in the mail, you have 30 days to respond with updated medical documentation. Many people miss this deadline simply because they do not recognize what the envelope is. Do not let that happen to you. If you are a senior on a fixed income receiving retirement Social Security, you may feel these changes less directly. Unless you also receive SSI, have a pending overpayment matter, or are affected by the payment timing shift. But the COLA adjustment that took effect in January, 2.5%, is already being eroded by inflation in housing, groceries, and prescription costs. For the average retired worker receiving $1,907 per month, that 2.5% COLA added roughly $46. Meanwhile, Medicare Part B premiums increased this year, eating directly into that gain. If you are a veteran receiving VA benefits, pay close attention. VA disability compensation is not SSA income, and in most cases, it does not count against your SSI eligibility. However, if you receive both VA compensation and SSI, the SSA requires careful reporting of your VA benefit amounts. Any change in your VA rating, upward or downward, must be reported to the SSA within 10 days. Failure to report can result in an overpayment finding, even if you did nothing wrong. If you are a low-income family relying on Social Security survivors' benefits or family maximum calculations, the payment shift and the income verification waive can delay or temporarily interrupt benefits during the processing period. The family maximum for Social Security benefits can range from 150% to 188% of the primary worker's benefit, and errors in that calculation are among the most commonly disputed in the system. I'm not going to leave you with just information. I'm going to give you a clear, step-by-step action plan that you need to start on today. Step 1. Log into your My Social Security account at ssa.gov right now. Go to ssa.gov and log into your My Social Security portal. Review your benefit payment history, check your scheduled payment date for May, and look for any pending notices or alerts in your message inbox. The SSA posts overpayment notices and CDR initiation letters digitally, often before the paper letter arrives. Catching it early gives you more time to respond. Step 2. Update all household and income information. If anything has changed in your household, a new roommate, a change in a family member's income, a one-time payment you received, a change in your living arrangements, report it to the SSA now. You can do this through your online portal by calling 1-800-772-1213 or by visiting your local SSA field office. Unreported changes are the #1 trigger for overpayment findings. Step 3. Gather and organize your documentation. Pull together the last 12 months of bank statements, any income records, your current lease or mortgage documents, medical records if you are on SSDI, and a copy of your most recent award letter. Keep these in a folder, physical or digital, that you can access immediately if you receive a notice. Speed of response is everything in this system. Step 4. Set up alerts on your bank account. Given the payment timing shift in May, set up a low balance alert on your checking account so you are notified immediately if a deposit does not arrive on the expected date. This gives you 24 to 48 hours to call the SSA and investigate before bills start bouncing. Step 5. Contact your local legal aid office if you receive an overpayment notice. You have the right to appeal any overpayment determination, and you have 90 days to request a waiver or reconsideration. Legal aid organizations offer free help with SSA appeals. Visit lawhelp.org to find your state's resources. Do not try to navigate an overpayment appeal alone. Step 6. Find your local food bank and emergency assistance program. Now, before you need it. Visit feedingamerica.org to find your nearest food bank. Contact your local area agency on aging, AOA.gov, to find emergency utility, rent, and food assistance programs available in your county. Having this information before a crisis hits means you are not scrambling at the worst possible moment. Before I let you go, I need to say something directly to you. You are not alone in this. I know how frightening it is to open the mailbox and see a letter from the SSA. I know how confusing the language is, how overwhelming the forms are, and how powerless it can feel when the system seems to be working against you instead of for you. But I want you to hear this clearly. This is not your fault. You worked. You paid into this system, sometimes for decades. These are not handouts. These are not charity. These benefits are yours. You earned every single dollar. And you have the legal right to fight for every dollar that belongs to you. The SSA makes mistakes. Their own data proves it. A 6% error rate is not a small number when we are talking about millions of people's livelihoods. That means the system is not infallible, and you have every right to push back. Use the 6 steps I gave you. Share this video with someone who needs it. A parent, a neighbor, a friend on fixed income. The more people who have accurate information, the more people who can protect themselves from errors and avoid financial devastation. If this video helped you today, please hit that like button. It helps this information reach more people who need it. And if you haven't subscribed yet, hit that subscribe button and the bell icon so you never miss an update. Coming up next, I am going to break down exactly how to write an SSA overpayment appeal letter that actually works. You won't want to miss it. Stay informed, stay protected. I'll see you in the next one.